Hi, Mike Dillard here, and welcome to part 2 of the Elevation Group's Year in Review. Now, with video 1, we walked through the reasons why the economy has collapsed and why it's not going to recover anytime soon. Knowing this information is what has allowed us to position ourselves and our assets to avoid danger and even profit. Well, today in video 2, we are going to show you 3 to 4 investment strategies of the rich that we are now using to turn these challenges into opportunity. But in order to do that, you have to come to the realization that the American middle class mantra of socking money away into a balanced portfolio of mutual funds is over. It's an illusion. And as we found out in video 1, the endless exponential train of growth required for that to continue to work has jumped the rails, and these poor folks are unfortunately still on that ride. So what's the solution? Is it possible for boomers to protect the funds that they have left or even recover some of the losses? What can the next generation do with their money in order to protect and grow it over the long run in such an unstable economic environment? And is it possible for the average person with limited funds to still achieve financial prosperity using the investment strategies of the rich? Well, the good news is that the answer to all of these questions is yes. And today, I'm going to show you how we've been doing exactly that over the past year. In fact, we're going to go over, first and foremost, how I've managed to create a $100,000 per month tax-free retirement foundation that's independent from the crazy risks and ride of the stock market with the help of Paul Harmon here. I'm going to show you a 3-part real estate strategy with the help of JP and Adrian, which combines cash flow real estate, infinite banking, and tax credits, which is on track to produce a very safe and very conservative annual return of at least 27%. Next, we're going to introduce you to Dan over here, who owns a financial services company that helps people like you free up the funds that are sitting in your IRA so that you can use that money to buy physical gold, silver, or even real estate. And we're also going to have an incredibly special guest join us in this video, Robert Kiyosaki's personal advisor on precious metals, Michael Maloney, who's going to answer the big question that many people have today, which is it too late to buy gold and silver? And finally, I'm going to throw up the scoreboard here, which is going to be quite a bit of fun, that are going to put against the strategies that we've been implementing and the opportunities that we've come across head-to-head against the performance of the top mutual funds in America, over 5,000 different hedge funds, billionaire portfolio manager John Paulson, and even Mr. Warren Buffett himself. And what's probably going to stand out the most, if it hasn't already, is that this entire project is about real people and getting real results. And in fact, I really can't think of anything else out there that is like what we are doing today. In fact, the Elevation Group is unlike anything that exists anywhere in the world, and I think that's going to be really obvious if it isn't already by the end of today's session. So grab a pen, grab some paper for some notes, close the door, and pay attention, because what you're about to see and witness has the potential to change your financial stake in life. And with that being said, let's go ahead and dive in. In the beginning of this project, my first goal was to establish some kind of retirement security for myself and my family after witnessing the crash of 2008 and knowing that what's about to come on the horizon is still out there looming. I didn't want anything to do with the stock market on a long-term basis. Today we have a global market that is trying to deleverage on one hand and deflate, and yet Washington and the Fed are doing everything they can to prevent that from happening. And these two opposing forces are creating an incredible amount of volatility that I just don't want to have any part of. And so to prove how hard it's been to avoid this kind of chaos, let's go ahead and dive into our scoreboard here. Up here at the top, I've got the S&P 500's performance for 2007, which is a really good indicator of how the stock market has done in general. So since 2007 to date, the S&P's average return has been minus 20.2%. So congrats. If you had some money in the index fund because you've been told that's the safest long-term thing you can do, you've just lost 20%. Since 2011, if you've had money in for this past year, you've made approximately zero. you haven't made any return on your money, and in my opinion, put up a ton of risk for the privilege of doing so. Right here, we have mutual funds, and I actually pulled this segment from CNNMoney.com's top 70 mutual funds for 2011, and I picked two categories to pull from. The first is the top 13 mutual funds that are based on large cap stocks, and the performance for this was a whopping, for 2011, 0.25%. Yeah, or worse, almost. Their foreign mutual funds, so if I took the 13, I averaged them, it came out to 0.25. For their foreign picks, that came out to negative 12%. So you lost 12% this year if you had money invested in those mutual funds. What about hedge funds? Everybody always hears about hedge funds, and all the people use hedge funds, right? Well, if you go to hedgefund.net's webpage, they list all the returns for all the major hedge funds. And the average return, everything put together for their 5,200 hedge funds that they track, was negative 3.51%. So, and we get down to John Paulson, who is the famous billionaire portfolio manager that was the subject and the big winner in Michael Lewis's The Big Short. So how has John done? And a ton of money was given to him after he successfully called the housing bubble in 2008 and just made billions and billions of dollars. Well, if you had been one of the people who read the book and were like, I'm giving Johnny my money, if you had participated in his Advantage Plus portfolio this year, you would have lost 47% of your money. If you had invested in his recovery fund, which is positioned in a way to take advantage in the recovery of the global stock markets in the U.S., you would have lost 31% of your money this year. So congratulations, you're doing very well. And how about Mr. Warren Buffett himself? Well, for Berkshire's A-shares, since 2007 to date, you would have lost 26% of your money. And for 2011, you would have lost 6% of your money. The good news is I don't think this is going to be hard for us to beat. So guys, more than anything else, what I think this demonstrates is these are some of the most intelligent, especially these guys, investors in the world who are infinitely more intelligent than me. I will gladly admit that on a scale of 1 to 10 of financial intelligence, these guys having 10, I'm at a solid 1.5, being generous. So my point is not to say that I know more than these guys, because they know more in their left pinky than I do in my entire brain about money and finance. So if this is what they're getting, it's a crazy world out there. And what this tells me is that a lot of these folks, as smart as they are, especially this guy, unless he just says it on air, they're in denial about what's coming. Because, Buffett's like, oh, we're going to recover, and I'm buying everything while it's low, and, blah, blah, blah. Okay, well, I'm glad I didn't give him any of my money this year. I'll just put it that way. Or since 2007, frankly. So if this is the environment, and this is volatility, and this really demonstrates that, mainstream finance really doesn't know what's going on. They don't know how to deal with it. Where do you put your money? We've got the market. We've got mutual funds. We've got hedge funds. We've got the best brains in the industry all losing money. So as you can see, the entire focus for every investor today is all about risk management. How can you make a decent return on your money while reducing your downside risk as much as possible? Well, the biggest risk that I can see today is the abuse of our fiat currency, the dollar, by the looters in Washington who are literally stealing money on a daily basis from the pockets of every single person watching this. But that also creates our largest opportunity, and that's, again, what we're here to talk about today. So when you consider that every single fiat currency in history has been destroyed, typically through debasement, when a government attempts to pay off overwhelming debt levels by simply printing more currency, the fate that's in store for the dollar, in my opinion, is absolutely inevitable. And that's why I started putting the vast majority of my assets, around 90%, into gold and silver, starting back in 2007 and in the beginning of 2008. At that time, silver was about $10 an ounce. Gold was about $800 an ounce. And I've been shouting this from the rooftops for almost 4 years now. You know, when EVG opened up this time last year, gold was around $1,375 an ounce. Silver was at $29 an ounce. Well, today, gold's hovering around $17.50, and silver's about $34. Everything goes up, you know, $1 a day, essentially. So that's a 28% increase in gold for 2011 alone, and a 10% increase in silver. Since 2008, January 2008, gold is up 110%, and silver is up 125%. So we're getting to the bottom of the page here, but I'm going to put 110% here for gold. And what was that? 125% for silver. Now, obviously, you know, these returns only matter if you bought your gold and silver in January of 2008, and I've obviously accumulated positions ongoing since then. So what is my actual return, you know, over the last 3 years? I don't know. I don't care, but I know that it's positive. I know that there are 2 plus signs there, yes. So, you know, while that's obviously fantastic, you might be asking yourself, with gains like that, is it too late to buy gold and silver, or have you missed the train? Well, to answer that, I want to turn to a very special guest and one of the most important people in my life for the past few years, Michael Maloney, who's joining us via broadcast from